Welcome to the Trading Lounge and the Indices Report, and today we're starting with the Australian market. Now, with the Australian market, we've been working through a bearish count. Now, most of the markets around the world currently are in bullish mode, and we're counting structures to the upside. But as you know, I've always been a bit cautious with the Australian market, and because the banks, the banking sector essentially had this move down through here. In the banking sector, this established itself as a pretty clean, clear five-wave structure. So once that occurs down here, then we'd look for an A and a B and a C wave here, and then another five waves down. So from here, we've got this is an A and a B and a C wave here for the A wave, the B wave pulling back 61.8%, and then the C wave up here in five waves. So basically, we're finished here. So if that's the case, then we'd be looking for another five waves down through to here. But obviously I've made a mistake either here with this market, or I've made a mistake with the other markets, the US and the European markets. So I'm not sure, because at some point, you know, Australia will follow the other markets, or will the other markets adhere to this particular count? I don't know. I've made an error. There's something I don't know somewhere, but that's okay, because at least if we don't know, then we can work with that, and we can be extra cautious. So this move up here from this low here, and that's the low on this side. It does appear that we've got a corrective. It does appear that this is corrective up here, okay? And the structure that we're looking for, if I can go to maybe a 4-hour chart or 2-hour chart or something, this is okay, yeah. So here we're looking for wave 4, wave 3, and wave 5 here. Now, there's a couple of things that we can sort of, and then that wave B goes in here. Now, there's this particular, well, starting from here, this A wave, B wave, and C wave up here for the A wave, and then sharp for the B wave, which is typical, and then five waves up for wave C here. Now, I may have made a mistake in here, in that I know that wave 1 is fine and wave 2 is fine here. Maybe wave 3 here maybe I've made an error in here, and the error would be, if I've made one, would be that the fifth wave is not finished here just yet. So this would be wave 3 here and wave 4 here. That would pull back to the wave 4 of 1 lesser degree, we'll put that there, and then move up from, come down in A and a B and a C, whatever, and then move up into here for wave 5. So that's possible, because I may have made a little error in this choppy price action here. If I come to a 2-hour chart here, you can start to see how sort of choppy it all is in here. So but I've pulled it apart, and I'm probably not that far sort of wrong with it. I'm just sort of looking at possibilities where I can be wrong. So as far as it goes, the A wave, the B wave, and the C wave here can be finished. So that means that we can be in bear mode from here. Now, if we're still in the bullish mode, then there's a couple of things that we could look at. First of all is that, as I've just mentioned, if this is the top of a wave 3 here, then we would have an A wave here, a B wave in 3, and then a C wave here coming back to this point. So I know that we've got 5 here, and I know we've got an A, B, and C in here, so we'll look for another 5 here. So it can come back into this area here. That's one step. Second step, if this moves down to more of a bearish picture, we've got 5 waves here already. We've got the counter trend here, and we'll get this one here. Now, if we get 5 waves here, right, then if we get 5 here, well, then we'll get a counter trend in 3, and then we'll get another 5 waves here, okay? This is the 50-60% retracement level here on this here. So if I've made a mistake, another bullish mistake, then it could be that we've got up for wave 1 here, and then an A and a B and a C wave for wave 2, and then we push up through here. So there's a couple of steps here. First of all, there's the step of having 5 waves, 3 waves, and 5 waves down to this point. If we see a move through here, then we need to look at the next step, which will be an A and a B and a C to this point here. And then if we've made a mistake with this one, they're just not mistakes, they're just points of references and steps along the way. Now, if we get 1, 2, 3 here, 4 here, and then 5 here, then we know that we've got a bear market on our hands, and we'll be looking down at 5,000 at that point, because if we've got 5 waves here, then obviously we're going to get 3 waves here and then another move down, and it will be this move here that we will really start to, play ball a little harder at that point. So there's certain steps. Each step we'll be able to work it out if it's the case. So anyway, I just thought I'd sort of point that out. On the 15-minute chart here, for example, yesterday we were looking for we're looking for wave 3 here, and we're working through here, and I thought there might have been one more little move, one more little low here, but didn't occur. You should have been long above the 70, break above the 72 anyway, if you know your levels. And then we never found support on top of group 1, which is 10, 20, and 30, because support on here would send us to the upside. So we're in this corrective range, as we know. So from group 1 down to group 2 here, 65, that's our swing range. You know that when we arrive here, that's our first swing thing here. If we get support here, well, then we go up from here. If we get this as resistance here, then we go down from this point here, and this is the wave 4 of 1 lesser degree here. So if I've made my first mistake, then, well, it may not be the first, but in terms of this being the third wave up here, and the fourth, this actually being the fourth wave here moving up, that's one scenario. The other scenario is that, and this is possible as well, that this here is just wave 1 up here, then an A and a B and a C wave here for wave 2, and then a move up from there. And if we get a break above this point here, that B wave here, then you know that you can trade long from that point. Okay, so that's something. So 57.20 breach here, you can go long from that point. So that's possible. So look, I was just looking at the bearish side of everything, because the rest of the markets around the world are quite sort of bullish. They haven't actually sort of confirm that totally just yet, but we are looking for that to occur. Now, so that's the scenario here, long above the 57.20. There is a possibility of a larger correction happening, and we need to be mindful of that. We need to know the steps. So step 1 here, we can see we've got 1, 2, this is 3, 1, 2, 3, 4, and 5 to here for wave 1 or wave A, then an A and a B and a C here for wave B or wave 2, and then wave C coming down through to here. So so a couple of steps. If the 72 here becomes the retested resistance, then we start looking at possibly the wave 4 scenario coming into play. And as I mentioned, if this gets out of hand in terms of wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here over the next few sessions, then you know that because we got 5 here, then we're going to get a 3-wave counter trend retesting this supply and then down from that point there. Okay, so you need to keep that all in mind. Now, I looked at another mining country, which was South Africa, and this is just a daily chart here. And from their wave 4 here, they've got a nice 1 and 2 and 3 and 4 and 5 here. And yes, that could be intermediate wave 5 sitting here. And this could be 1, 2, 3, 4, and 5 here as wave 1 here. But wave B has got overlapping wave structures with wave 1 here. So I've labeled it an A wave and a B wave and a C wave. and looking at this as wave 1 to the upside, wave 2 here, then wave 1 and wave 2. So we should see a very strong move here in South Africa for this market, you know. So we'll keep an eye on this, and especially this low here. This will be that's the important one here. So that one there. The US markets, we were looking for the S&P 500 to develop support on top of 2100 here, 2100. And what that will do is that will give us a bullish picture. Okay, now what we'd been looking for was wave 1 here, ABC for wave 2, then up for 1, and then back for 2 into the 50-60% area here. And that's fine, we've got that. We're looking for a move up. I can see that it's struggling at the 2100 here, and we won't go long, or shouldn't go long, until I've got the closest largest number as tested support. Otherwise you're exposing yourself to unnecessary risks just to get that little bit more. So that 2100 is what we're looking for. If we get that, then with that support, then we can look at this structure, the 3, the 4 and the 5. I mean, I am concerned about the Australian market, but all the rest of the markets around the world are pointing upwards. They haven't actually, fallen out of bed, so to speak. So, if this drops down through here, well, if it takes this low out here, then we've got a bearish picture here. All right, so we're certainly not out of the woods just yet for this market here on the 2-hour chart here. Yesterday, whenever we were looking at counting 5 waves up here, quite a nice 5 waves on the cash market, not really a problem. And then we were looking for an A and a B and a C here, and then moving up from that point there. Now I can see that it's really struggling here, and maybe it will come down lower here, and such, but I wouldn't turn bearish on this unless I had the 2072 here as the retested resistance here, or a clean breach of that price point there on the cash market. Even by one point, we would take that on the cash market as being a breach of that particular price point, and we would be looking to be short there. So as mentioned yesterday, if we get tested support on 2100, then we can be long, but we can't be long until we get that. On the 15-minute chart here, I was sort of pulling this apart a little bit. To me, this wave 1 to wave 2 here is acceptable in terms that it's pulled back into the 50-60% retracement level. As far as the structure goes here, it could be anything basically. So it doesn't sort of give me a lot of confidence. This particular move up here, I can count it as 5 waves. I could also count it as a corrective pattern as well, in terms of 1, 2, 3, A, B, C for the 4th here, and the 5th wave to here. So an A wave, a B wave, and a C wave here. So that, coming back in and meeting supply here and having a hard time here, so that's all on the on the cards as well. So that's why, this structure that I've got as wave 1 here and wave 2 here, I don't know about that. I mean, if that gets taken out here on the cash market here, then we've got a problem here. But as I mentioned, I wouldn't turn totally bearish unless I had, unless this group 2 here failed as support, and group 2, the important part here is the 72 here. So if that became the retested resistance, well, then would be in bearish mode from that point. So it's really all eyes on this number here. And the first step is the market needs to stay above that low here. In terms of the corrective pattern, we could end up having this here as the simple A wave, a B wave here, and 5 waves in the C wave here. That's why I'm not panicking too much. Do you know what I mean? So, and it would sort of pan out like that. So that's all possible as well. And when we looked on the Nasdaq yesterday, if I can just go over there for a moment, we were looking at the Nasdaq in terms of this move up off this low here. We were looking at it up here, we could point it out that there was 3 waves here, not 5 waves. So an A and a B and a C wave here. Now, it can be counted as an impulsive wave, but it would have to move up. So up for 1, back for 2 to here. So this would be wave 1 and 2 of 1 degree, and then the next degree smaller, this would be up for 1, A, B, C for 2 here, and then it would need to push up from that point there. But if it moves through this, low here, then it confirms that this is 3 waves here, and this original count, well, not original, but alternative count here, looking at it as an A wave, a B wave here, and then a C wave here, and then we move up from there. So we would need, this was just something different from the S&P 500, and it was something that we needed to acknowledge because it's something that the S&P 500 and the Dow Jones could fall into as well. So that's why we're looking at this here. So anyway, if that stays above here and moves up, well then it's rosy at that stage, but otherwise we would need to consider looking for 5 waves down here, and looking at this on more of a wave C on more of an angle. Wave A would be sharp, wave C would be on more of an angle, and that being on an angle, we would know that it's actually strong and it would move up quickly from that point. The Dow Jones, let's have a quick look at that just on the 15-minute chart. Once again, same as the S&P 500, I can count this down as an A wave and a B wave and 1, 2, 3, 4, 5 for the C wave here. But, this could get out of hand as well here. So a move through this low here would help with the bearish picture. And in this case here, we haven't, this all could be viewed as wave 1 and 2 here, wave 3 here, wave 4 here, and wave 5 here. So, but we know the Dow has been more bearish than the S&P 500. So anyway, we just got to sort of see, once again, it's this support here, as mentioned yesterday, that that we need to trade long on through here. So look for a breach of that. You wouldn't want to go long in any other way. And if this moves through here, then we need to reassess it as well. So even if it moves through to here and then moves back up there and finds support, you need to be a little bit careful about that as well. So we looked at the Nasdaq, and so we'll look at the DAX, the European markets. So yeah, I mean, one of the good things about this is that the Australian market's like this too, really. Same sort of pattern. So this is a corrective pattern here, right? But it could grow larger in terms of, it's quite big already for a wave 4, but it could be to here, then an A and a B and a C to here, just some sort of bigger structure here. But I don't think that's the case, and we've got a pretty sound sort of structure as we're moving up here, because we've got this as a corrective pattern, we've got this as an impulse wave here, and then we've pulled back here for wave 2. So we're preparing to go long once we get support on the 11,500 here. Okay, so that's what we're looking at, and we're looking at 5 waves: the 1, the 2, the 3, the 4, and the 5, up to 13,000. And on the 4 hour or 2 hour, doesn't really matter. Yeah, we're looking for wave 1 and 2, and then wave 1 and 2 here. This is all a little bit tricky to work out from here, but we do have, if I go to the 2 hour chart, it might be a bit easier. I mean, one of the positive things here is that this is a very clean, clear 5-wave structure to here and then to here. And then we've got the next 5 waves, which is also quite clear here. So we've got this, this A, B, and C here. And then this being this low here, once the market comes up through that low there, that also helps confirm that this is a corrective pattern here. So that's what we're looking at here. This has been a little bit tricky to count up through here because it was like lagging. It's starting to move okay now. And once again, what we were looking for here in terms of a long trade, I mean, you may be long already and that's fine, but coming up here, creating the first high above the level here, and then having a correction here, and then moving up from there. So really the trade is over this side over here after this particular correction here. On the 15-minute chart here, we haven't had a very clear, I mean, this can be counted, I've counted it the way it is, but it could be counted differently as well. It's open for interpretation. There's weak spots in it, so I could have the wrong count and somebody else could have the right count. It is what it is. But the main thing at the end of the day we were looking for is we're tracking this up through here. So we're looking for the first high above the level here, and then we will be looking at some type of correction here, and then we'll be looking at support here, that high, so we can go long off that high, this high here. But normally you start to create these lower highs here, and the lower one gives you your thing. So to get the timing right, I mean, technically we would trade to this point here, get out here, and then wait for the correction here, and wait for support over here, and then trade long over here. That's the way to do it. That's the way to get the timing right. So that's what we're looking for here. As I said, this particular move up here can be counted any which way, so it doesn't really matter. But when we start to look at other markets, the AEX was a good one to look at because it had its structure was much nicer. And there's a couple of other points here too that are worth noting as well, is that you can see that from wave 3 to wave 4 here, we've got overlapping wave structures here. So this is not an impulse wave, it's definitely a corrective pattern. And then we've got 5 waves up here for wave 1, back for wave 2, and now we're looking up here for wave 1 and back for wave 2, and then the third wave, fourth wave. So in this case we've got, this is why I'm a bit confused about the Australian market, because in this case here we've got, this is a very clean, clear, bullish picture. So I don't have anything on the 3-hour chart. That was an error, and I have to go back to this 4-hour chart. I won't go there, haven't updated that properly, so we'll go to the 2-hour chart. So this 2-hour chart here, this is basically what we're tracking here, and from this wave 4 here you can see that we're looking for 1 and 2 and 3 and 4, and we're looking for 5 here. So I was thinking that it could come anywhere from this high to the somewhere in there anyway, from this high or this high here, but push up here, make a new high here, and then have a corrective pattern here. Okay, so this is what the Australian market could be up against, so that 5,600 on the Australian market is something that we can be looking at in line with this market here, because this is quite a nice structure here on the 15-minute chart. I'm not sure if I've updated it. So wave 3, wave 4 here, so 1 and 2 and 3, ABC for the fourth here, and this 5th wave up here didn't make a new high here, so I was just assuming that would go up for 1, back for 2 here, 3, 4 and 5 here. But that is rather a big long 5th wave here, considering the size of wave 1 and 3 here. Normally we would expect wave 5 to be the same size as wave 1 if the extension's in wave 3. So look, it could finish anywhere up here, but what we're looking for is just to make a high above this here, and then that will settle that here. But at the same time, 1, 2, 3, 4, 5 is possible, and then the 61.8, 50, 60 point retracement level here. So this sounds about right. So the DAX has got to navigate across the medium level, 11,500, odd number, but it's a biggie, and it carries more weight than 11,000 or 12,000. And yeah, so we're going to see these European markets do this here. So that's that as such. The FTSE we need to have a look at as well. Sorry, and I didn't do this yesterday. Once again, here we're looking at, well, we've got up for wave 1, back for wave 2 here. The move up here is at the 50-60% retracement level here of this move down through here, and we expected it to stall and do its thing, and it's pretty much doing its thing in terms of, you know, doing its wave 4 correction. Now we've got this move up here making a new high here, so that can be wave 5 of 1 here. Okay, but at the same time, I think that it's possible to move a bit higher up here, and that move up here is just being wave 1 and 2 here, then 3, 4, 5. Probably not the case, but let's just have a look on the 15-minute chart here to get some better idea about it. I mean, this market's like the ASX 200. It works to every 50 points and every 100 points quite well. Dow Jones works every 100 points, and then once you understand that, you know that you can trade from 150 point to the next one, get out because you'll have some sort of correction, and you know, so it kind of gives you a bit of a framework to work in. Anyway, wave 3, ABC for wave 4 that we're looking for, and this has made a new high here. So it's possible, like I just mentioned the other one, that that this wave 5 here can be on top here, and that's it. Do you know what I mean? It's finished, and then we need to look for a larger correction to the downside. As it stands, we could look at this as being wave 1 and 2 here, and 3, 4, 5. Now, that's fine, but this low here, that needs to stay in place, okay? So while that low's in place, this market can move higher in 5 waves up through here, okay? Now, 6, 8, 8's a profit-taking number, so that's a perfect place for the bids to be hit, the sellers to move in, profit-taking occurring and whatnot, and then we'd expect it back here. So this would be in line with the DAX and the AEX and the CAC and all the rest of them as well. So they'll be pretty much in line there. Okay, well that's it. That's a bit of a mouthful. Sorry to take so long, but I really needed to point out the Australian market and what's probable there. But I think that there's a reasonably strong relationship between the FTSE and the Australian market. So perhaps we need to not panic so much and look at the Australian market in line with the FTSE and the DAX and the AEX and so on, and fit it in there in terms of pulling back, having a new high, and then pulling back into wave 2, or even starting wave 2 now, really, you know, because at the end of the day, this wave 5 here can be sitting on here. And then we would need to have a look at the 50-60% retracement level from here, from that point here, and we're back down into this area. If this is the case, then we're back into this space here before we move up. All right, yeah, well that's that. Okay, cheers.